Well, I think, Target is clearly the standout because I think as you look at retail, a lot of these retailers are driving their comps or their same-store sales through average ticket, and that's it. There are a lack of retailers that are actually driving traffic. If you look at Target's almost 5.5% comp, half of that came from store traffic. That's incredible in this environment where that is such a hard thing to come by. And really, Target is thinking like a digitally native brand. They're listening to the consumer and they're coming up with their own private label brands at great value to fulfill what consumers want.
So you would say this is a victory lap. And the reason I keep coming back to that is that Target was really hammered a couple of years ago for an investment cycle, basically. Should investors look to the results here, look to other retailers and demand investment similar to Target and say you can also pull off a transformation like this in just 18 months' time?
Kelly, that's such a great point because I think a couple years ago, Walmart is in the same bucket and Target both embarked on an investment, a very capital-intensive investment plan, and originally they got punished for it, but guess what? Now it's paying off. You look at Walmart's valuation, it's high teens. Target is still quite a bit lower in terms of valuation. They're earlier in the investment cycle, but it's paying off. So investors need to listen to that. And eventually Target's multiple, I think, will move up toward Walmart's multiple.
What does Target's business mix look like in 3 to 5 years in terms of digital versus in-store sales?
That's a good question, Tyler. And I think, certainly the apparel business, which they're doing so many creative and interesting things with, that could represent, 25% of the business at some point. Clearly, they have a big grocery business, and that's something they've really been focusing on. They're doing a great in-store pickup business. As Courtney said, it's 3/4 of the fulfillment is happening in store, which brings down costs. But, I think that business gets bigger and bigger. Yes, that does come at a lower margin, but it's driving people into the store. It really is as they're picking up their items.
KOHL'S up 5%. What's going on there? Quick thought.
Yeah, KOHL'S, 2-year comp, almost 7% here. They talked about February being a little weak, but investors are looking past it because while February is maybe short on performance, they are incredibly long on initiatives. They're talking about millennial bars. They just signed a partnership with Planet Fitness. Will be rolling out in some stores.